Company background of Genting Berhad. Genting Berhad is principally an investment holding and management company. While the company was incorporated in 1968 and listed in Bursa Malaysia in 1971. The Genting Group was founded in 1965 when its founder, the late Tan Sri Lim Gautam, started his journey to realize his vision of building a mountain type in Malaysia. Today, the Genting Group comprises the Genting Berhad and its listed company, Genting Malaysia Berhad, Genting Plantation Berhad, and Genting Singapore Limited, as well as wholly owned unlisted subsidiaries, Genting Energy Limited and Resort World Las Vegas LLC. Now, the Genting Group, led by Tan Sri Lim Kok Tai, the group is involved in leisure and hospitality, oil palm plantation, power generation, oil and gas, property development, life science and biotechnology activities, with operations spanning across the globe including Malaysia, Singapore, India, Indonesia, UK, US and Egypt. Under the leisure and hospitality, Genting provide and lay out number of brands such as Genting, Resort World, Genting Grand, Genting Club, Cropfall and Maxim. The Genting Group also tie-ups with established names such as Universal Studio, Premium Outlet, Hard Rock Hotel, Zouk, Hilton and other renowned international brand partners. The company vision is we are a leading multinational corporation committed to the enhanced shareholder value and maintaining long-term sustainable growth in our core business. Next, our mission, be committed to innovative and the adoption of the new technology to achieve competitive advantage. Second, generate a fair return to our shareholders.
The Chief Operating Decision Makers has been identified as the Chairman and Chief Executive Tan Sri Lim Kok Tai and the President and Chief Operating Officer and Executive Director Mr. Tan Kong Han. Responsibilities to control over the operating decision made, allocating resources and assessing performance of the operating segment, establish and develop goals, policies, guidelines and strategic objectives, and lastly, managing overall company operation. The operating segment of the Genting Berhad are leisure and hospitality. This segment include the gaming section, hotel, food and beverage, theme parks, retail, entertainment and attraction, tours and travel-related services, development and operation of integrated resort and other support services. Next, plantation. Plantation involve mainly in oil palm plantation in Malaysia and Indonesia, palm oil milling and related activities. Third, power. This segment involved in generation and supply of electric power. Property. Property involved in property development activities and property investment. Oil and gas. Oil and gas involved in oil and gas exploration, development and production activities. And lastly, investment and others. This segment consists of all other immaterial segment including investment in equities.
Once operating segment have been identified, the next step need to be done is to test the segments with quantitative 10% threshold test. This is to identify which operating segments are reportable in financial statements. The quantitative threshold test comprises of 3 tests, which are revenue basis, profit basis, and asset basis. The segment is considered as reportable segment if it is 10% or more of the combined revenue of all operating segments. Second basis is profits, where the reported profit or loss is 10% or more of the total profit or loss. The last one is asset basis, where the asset is 10% or more of combined assets of all operating segments. Business segment can be identified as reportable segment when meets any one of the following quantitative threshold. This is the calculation of the 10% threshold test for Genting Berhad. There are 6 segments in total, which are leisure and hospitality, plantation, power, property, oil and gas, and investment and others. Only two identified as reportable segment, which are leisure and hospitality and plantation, because there are more than 10%, while the others identified as non-reportable segments. Next is 75% threshold test. If operating segments does not meet the thresholds to be reported separately, it can still be separately disclosed. Combined external revenue of identified operating segments must be 75% or more of total external revenue of the entity. If total external revenues reported by operating segments is less than 75% of total revenues, additional operating segments shall be identified even if the segments fail the 10% threshold test. 75% threshold test for new segments will be calculated with formula external revenue of reportable segment divide total external revenue multiply 100. For Genting Berhad, we will get 91.48%. More than 75% means no additional segment to be reported.
For strategic focus, firstly is strength Genting Berhad, diversified business portfolio, spending leisure and hospitality, plantation property development, biotechnology and oil and gas helps mitigate risk associated with industry fluctuations. Secondly is global presence marked by international operations offer opportunity for revenue growth and exposure to diverse market. Next is weakness. Genting Berhad's revenue is heavily relies on tourism, finding it susceptible with economic downturns, travel restrictions, or global crisis.
There are some accounting policies related to FAR570. Genting Berhad identified its operating segment based on the internal reporting that is regularly reviewed by the company's chief operating decision makers, so CODM. This segment represents distinct line of business or geographical areas. Next, the company discloses information about its operating segment in its financial statement. This includes revenue, profit or loss, asset, liabilities, and other significant items. Segments are aggregated if they have similar economic characteristics and meet certain aggregation criteria. Lastly, operating segments are measured using the same accounting policies as those used for the company as a whole. This ensures consistency in financial reporting across different segments. Basis of preparation interim report includes MFRS 134 interim financial reporting, International Financial Reporting Standard, Companies Act 2016, historical and consolidated basis, and Para 9.22 of Bursa Malaysia Securities Berhad listing requirements.
Accounting policies used in preparing interim report under MFRS 116, Property, Plant and Equipment (PPE) started at cost less accumulated depreciation and accumulated losses. The depreciable amount of an item of PPE is determined by the difference between the cost less its residual value. The residual value is the estimated amount that the group expect to obtain from the disposal of asset, which is after deducting the estimated cost of disposal if the asset was already of the age and in condition expected at the end of its useful life. Under the MFRS 140 investment property consists of the investment in land and building that are held for the long term rental yield and or for capital appreciation and are not occupied by the group. It is initially measured at cost including direct transaction costs and borrowing costs if the investment property meet the definition of qualifying asset. Subsequent expenditure is capitalized at the asset carrying amount only when it is probable that future economic benefits associated with the expenditure will flow to the group and the cost of the item can be measured reliably. All other repairs and maintenance costs are expensed when incurred. When part of investment property is replaced, the carrying amount of the replaced part is derecognized. Type of interim report prepared by the Genting Berhad. First, condensed consolidated income statement. Second, condensed consolidated statement of change in equity. Third, condensed consolidated statement of cash flow. Fourth, condensed consolidated statement of financial position. And the last one is condensed consolidated statement of profit or loss and other comprehensive income.
Current and comparative periods of statement according to MFRS 134 interim reporting. The current and comparative periods of statement will be prepared from 1st July 2022 until 31st September 2022, that equivalent to the third interim quarter of Genting Berhad in 2022. Let's start with statement of financial position. Reporting period for current interim in 3 months, which is from 1st July 2022 until 30th September of 2022. Comparative end of the preceding year, the reporting period is 12 months, which is from 1st January 2021 until 31st December 2021. For statement changes in equity, reporting period is 3 months starting from 1st July 2022 until 30th September of 2022. The comparative year is reporting period for 6 months, which is start from 1st January 2021 until 30 June 2021. Next is statement of cash flow. The current reporting period is 3 months, which is start from 1st July 2022 until 30th September of 2022. The comparative year reporting period is 6 months, which is start from 1st January 2021 until 30th June 2021. For statement of profit or loss and other comprehensive income, the current interim reporting is 3 months starting from 1st July 2022 until 30th September 2022. And current interim reporting for the comparative year is starting from 1st October 2021 until 31st December 2021. For the cumulative period for the current year is from 1st January 2032 until 31st December 2032, and the cumulative period for comparative year starting from 1st January 2021 until 31st December 2021. There are two adjustments that can be made to the interim report, and the first one is inventory. The value of inventory as at 31st December 2022 is 8,017,200,000 ringgit. The net realizable value is expected to be amount of 817,100,000 ringgit. As we know, we should compare the lower cost of inventories and the net realizable value to determine the values of inventories. Genting Berhad should calculate the value of inventory to the net realizable value, which is amounted to 817,100,000 ringgit, which is lower than the value of inventory, which is amounted 817,200,000 ringgit. Second adjustment is trade receivable. The trade receivable as at 31st December 2022 is amounted to 2,631,700 ringgit. Genting Berhad should estimate 80% of collection on trade receivable, which is amounted to 2,105,360 ringgit. And the remaining of 20% should be classified as uncollectible debt and will be appeared in statement of profit or loss as doubtful debt. Genting Berhad should reduce the amount of trade receivable from 2,631,700 ringgit to 2,105,360 ringgit.
This is the extract of statement of financial position for Genting Berhad. Before adjustment, the inventories is 817,200,000, and after adjustment, we will get 817,100,000. It means that it will decrease amounting 100,000. For third receivable, before adjustment, it is 2,631,700, and after adjustment, we will get 2,105,360. It means that it will decrease amounting 500 to 26,340.